Hey everyone, Matt here with your Team Farnham housing market update for July 2020. Wanted to a lot of I want to share with you today, but let's start off with just hope you had a great 4th of July. Hope summer's been nice for you so far. I know with our city specifically here in Las Vegas and Henderson, we have a lot of folks that are still out of work as a result of COVID-19. If that's you or your family affected by that, man, we really hope you're back to work soon. We're all in this together. If there's anything our team can do to help you, please reach out. On a positive note, for a sports fanatic like myself, we have some NBA and NHL playoffs starting this week. Actually, at the time I'm doing this, there's 2 games tonight for basketball. So if you're as excited about that as I am, let's text or message about that. Go Knights, go. I'm excited. I'm very confident that they have a really good chance to get back to the finals. So let's see what happens. Let's get right into the stats. Let's start with the stats. So right now, home sales are up 45% since last month. So we had 45% more homes sell over last month. It's still down 15% from a year ago. But I think both of those numbers are very understandable and expected from what we've been walking through with the pandemic. So that's good to see. The median price for single family homes was up again this month. It's up to $325,000. So as you know, it was at $319. It dropped down to like $310. It came up to $315 and now up to $325. So it went up another 3%, and it's up about 7% year over year. So that's really great to see. Inventory, we've been talking about every time I do this, but inventory last month, I told you it dropped 4%. We were seeing more homes going under contract and selling than we were seeing coming on the market. That continued this month, actually 3x. Inventory just dropped 12%, 12.4% since last month. So we're continuing to see a decline in inventory. Last month, one thing that I mentioned was how quickly homes are selling. In fact, last month I said that homes that are going under contract, accepting an offer within 60 days, 85% of homes were selling within 60 days. That has declined a little bit this last month, 80%, so 5% less. 80% of homes went under contract within 60 days. Still fantastic, but that is representative of a few homeowners overpricing their homes. We've seen a lot of price reductions, not because home prices have fallen, simply because the market's been really strong these last couple months and some sellers are shooting for the moon. It's not the right strategy. I don't care what the market's doing. Price your home correctly, create that urgency, and you will end up with a better result. So that is good news. From Scott Reynolds, Evergreen Home Loans, my lender partner. I talk about Scott all the time, but he shared with me that for 7 weeks in a row now, purchase applications for mortgages, not just refis, but purchase applications are up year over year, 7 weeks in a row now, anywhere from 13 to 33% from a year ago. So no wonder, right? Interest rates are incredibly low right now. It's a really good time to lock in that long-term mortgage. Rates have fallen below 3%. You've probably seen the headlines. They've been all over the place. We've shared them on our social media pages, but it's incredibly historic lows for interest rates. There's a Housing Wire article I'm going to share with you below, so you can see an article on that. But right now, for a 30-year mortgage, it's averaging right around 3%, and for a 15-year mortgage, actually closer to like 2.5% for a 15-year mortgage, which is just amazing right now. So take advantage of that if you're looking to refinance or get into a new home. Low rates, however, though, are partly responsible, I believe, for the low inventory. I think there's a lot of homeowners that are seeing an opportunity to refinance their mortgage into these historic rates and stay put for a while they can save a lot of money. And I can't really blame them for doing that. But I do think that's the only negative thing that we're seeing related to sales and inventory is I think it's keeping a lot of folks in their home, which is, I don't blame you, great rate, right? But it is affecting inventory a bit. A couple fun charts I'm going to share with you below. I've shared these in the past, but now they're updated. Scott Reynolds from Evergreen shares these with us. One of them is a Freddie Mac chart that shows the interest rates since 1972. And on the chart, you can actually compare it to today's rates you can put a loan amount in and compared to any point back to 1972 at the same loan amount, what would your payment have been today versus 1972, 1985, whatever year you want to choose. Just for an example, I wanted to share with you, if you just go back 2 years, just 2 years ago, a $350,000 loan, your payment on a 30-year mortgage would be $270 less per month today than just 2 years ago, because interest rates have come down that far. In fact, looking at the chart, rates are a little bit lower than it says because it might be a couple months old. So it might even be a bigger savings than that. So that's just incredible. So play with that. The link's below. I think you'll have fun checking that out. And then pricing, home prices, there's another chart that's on there. So check that one out. And it shows over the last 3 years in the United States, what cities have led the country in appreciation. And you will see Las Vegas proudly at the top of that chart. In the last 3 years, the appreciation we've seen is the #1 in the country. And then closely behind us is Phoenix area and then the Seattle, Washington area. Not surprising for either of those. But anyways, that's a fun chart. You can check that out as well. Of course, if you have any questions about those things, just reach out to our team. Also wanted to share that, despite our unemployment and the challenges that we obviously have here locally with the service industry and the convention space, the market is strong. We're seeing prices go up. We're seeing inventory low. Part of the reason is this California exodus you've heard me talk about. It's real. There's a lot of people coming out of California for a myriad of reasons. But if you look at the census information, I look at the census website and at the heat map, and LA County is by far the most popular area that folks are coming to Clark County from. So I also am going to include a link for you. It's some research we've been doing for some clients, but we have a few different websites. If you want more information, reach out to us, but I'll share one of them with you below. But you can actually put in different cities in the country. And if you're going to move to Las Vegas with cost of living, it can show you what your salary needs to be or could be to maintain the same cost of living, the same lifestyle. And actually, if you compare Los Angeles to Las Vegas, you can make 28% less. So if you make $100,000 salary in Los Angeles, you can make $72,000 in Vegas and maintain the same lifestyle with cost of living difference between the two. So it's really eye-opening when you play with this. And also wanted to share with that, a lot of people that we see moving in have remote jobs, meaning that their employers are letting them work from whatever city they want to live in, and their income's not dictated by where they live. So it's almost like a 28% bump in pay when you move from LA to Las Vegas if you have that type of career or job. So pretty interesting. Forbearances. I just want to touch on forbearances. I know I've mentioned this a few times. Definitely get educated. If it's something you're walking through already, communicate with your lender regularly. There's constant updates. It's a very fluid situation. For those loans that are backed by Fannie Mae, which is a massive percentage of the conventional loans out there, Fannie Mae just announced a potential 180-day extension to the forbearance. Doesn't mean it's forgiven. It just means, you could go another 180 days potentially without having to pay that mortgage. However, there's still going to be some type of repayment plan or whatever. As far as kind of a summary, what those look like, there are repayment plans, there's loan modifications, there's deferments where you can actually just tack it onto the end of the loan. But not every lender or servicer, the actual bank you make your payment to, is offering the exact same things or offering the same timelines or anything. So don't just assume anything because your neighbor or your friend got this deal. If it's a different bank and it's Fannie Mae or not Fannie Mae, it definitely could be different. So call your bank, get educated. Again, avoid forbearance if you can. It's very misunderstood. People do need to pay this back. I do know folks that are already very concerned about balloon payments coming down the road. So of course they can talk to the bank and try and work something out with a loan mod or deferment or whatever. But nonetheless, avoid it if you can. But if it's something you have to do, you have to do. And then, just seek wise counsel with your financial advisor, maybe a CPA. Call our team. We'd be happy to kind of talk through different options with you before you just jump in headfirst into that or selling or renting or anything like that. A couple of things to share with you real quick to wrap this up. What else did I want to share with you? Just a couple tools. We have a tool called HomeBot that we've rolled out recently. Many of you guys are on HomeBot now. HomeBot is a really cool engagement tool where you can actually, it gives you an estimate of your home value, but you can play with, how much money do I save in interest if I make extra payments? What would happen if I rented my property or if I turned it into an Airbnb? You can change your value based on improvements you've made, and it lets us know so we can kind of look at that for you too. But it's a really cool program. It talks about refinancing into different, 15-year mortgages and things like that. So if you have not been set up on that program yet and you want to be, just reach out to our team. We'll hook you up with that. We're still getting a lot of you guys into that system. It's a free service we're doing for you just to provide value to you. But we've had great feedback on it so far. So excited about that. And then also our Real Life at Level 10 series that we put out. I'm sure most of you are familiar with that. It's an educational series on real estate leadership and personal growth. Couple things that are really relevant to today. We just put a video out regarding selling in a pandemic, and then also getting ready to release is buying in a pandemic. So check those out. Those will be out soon. The selling one's already out. And then also one that we just did that's going to be coming out is selling versus renting. I'm having a lot of folks call me because of just some uncertainty out there with COVID. Should I sell my home? Maybe I want to rent my home out. And there's really a filter that you should be thinking through to make the right decision for you and your family. So anyways, check those out. Give us a call. We can talk through that, specifically to your situation as well. So we'll put links to that below. And that's really it. Just wanted to throw those things at you. I hope everybody in your world is happy, healthy, and safe. I hope you're back to work. If not, hopefully real soon. Reach out to us if there's anything our team can do for you. We love hearing from you. Any questions we can address. One thing you'll start seeing a lot of is I've been doing it, just started recently. You're going to see a lot of videos rolling out. And then also some other members on our team will be doing the same thing, but kind of a spinoff of our Real Life at Level 10 series. We're doing real life questions, real life answers. So we're trying to get into the discipline as often as we get good questions from our clients, we're just shooting a video real quick and saying what that question is and the answer, just to keep you educated, keep value coming at you. So give us your questions. We love that content to be able to put out to help everybody else around us. So anyways, thanks guys. Enjoy the rest of summer. I'm sure you're gearing up for back to school. I know it's going to be a bit different. Most people are going virtual. Hopefully that's temporary. But anyways, we hope all the best for you. Thank you again for your trust and support of our team. Love you guys, and we'll talk to you soon. Take care.